You know the concepts. You've spent hours marking up charts and waiting for the perfect setup. But the moment you click buy, the market immediately turns against you. You hesitate on the next setup, second-guessing your analysis, and watch the trade run directly to your target without you. Or worse, you finally force an entry out of sheer frustration, only for the price to instantly snap back the other way. It is exhausting. You are buried under contradictory signals from countless sources, leaving you with a collection of concepts that fail the moment you put real money behind them. The reality is, your failure here is not a lack of intelligence. You have put in the screen time. You understand the terminology. But knowing what the patterns look like is useless without a timing framework. If you do not know exactly when the market intends to move, your stop loss is simply engineered liquidity to fill someone else's order.
Many gold traders enter the market the moment they see price begin to move, only to watch as a sudden reversal shatters the position. Institutional market makers engineer these initial spikes to activate retail stop-loss orders. They use that forced selling or buying to generate the liquidity they need to fuel a sharp reversal in the opposite direction. This creates a cycle where traders hesitate during the setup, only to finally commit exactly when the trap is being sprung. They find themselves swept into a loss just as the market moves toward their original target. Profitability in this environment depends on recognizing the market as a predatory system built to hunt the very liquidity retail traders provide. Abdul developed a strategy that waits for this institutional manipulation to finish before a single dollar is ever risked. In one live execution on a Tuesday morning, he used this confirmation to capture a $9,000 profit in less than an hour.
Welcome back. This is our live trade case study for Tuesday, the 5th of May, New York time. For Sydney, it's actually 6th of May, 2026. Taking a long position from the bullish fair value gap, and really just a scalp trade just to get back up to where I think the market needs to reach up into for the morning session. Out of session trade, I typically don't trade this early, but I think there's an opportunity here. I think this is just the false move down, opening gap, and I think the market needs to push up and take out liquidity resting above these highs. And so I kind of want to see us up here by around 9:30 p.m, 10 p.m. Right now it's 6:30 p.m. Asia has just opened. Asia opened at 6 p.m. So let's see how this pans out. Just a scalp trade to see if we can get up back up into this bearish fair value gap. I'm wrong if we continue lower and take out the low of the New York session. I think that will happen, but I think that's going to happen later in the day. I want to see traders get taken in the wrong direction first. So I kind of want to see us move up, which will allow me to take off my current long position. I want it to come up into here. There we go. Hit the target precisely. A little bit earlier than I expected, but at least we were able to take a quick $9,000 profit within, started here, 15-minute chart, within, well, let's just say less than an hour. And so if you want to learn exactly how I do this, I'm running a live training over the weekend. The link to register to that live training is in the description of this video. I'm only allowing a very select few people to attend that live training because I want to protect the information and I don't want to piss off my VIP community who pay thousands of dollars for this information. So don't miss the opportunity. I'm doing a live training over the weekend on exactly how to trade gold. Secure your spot. It's only going to be available to 5 people. That's it. Don't miss the opportunity.
He documented a second trade using these same principles, extracting $18,000 in a single day by shorting gold after the retail liquidity had been cleared. These results come from a specific, rule-based system that Abdul uses to navigate the New York session. The system, known as trap and shift, relies on strict temporal synchronization to identify when the market is most likely to manipulate price. The 4-hour chart establishes the macro directional bias. We then wait for the 10 a.m. New York session, where institutional volume enters. On the 1-minute chart, we hunt for a liquidity sweep, a rapid dip below a session low to trigger stops before snapping back. Predicting the timing of these engineered moves allows a trader to stop guessing about price direction and start anticipating the trap itself. Once the sweep occurs and retail traders are trapped on the wrong side, the system looks for a specific structural shift to confirm the new trend. This requires the formation of a breaker, a bullish block of candles signaling institutions are now actively pushing the price toward the target. The definitive signal is the fair value gap. A massive candle creates an empty zone where surrounding wicks miss, confirming rapid repricing. We deploy capital when price returns to retest this gap, providing a high probability entry before launching toward the target. Profits are secured by targeting the liquidity resting at the session high, exiting the position as the market moves to sweep the traders who are short. The trap and shift system generates its returns by following the exact footprint left by market makers when they move to trap the retail public. Abdul restricts the details of this timing and gap execution to a small group of traders to maintain the effectiveness of the strategy. This information is currently the primary focus for a VIP community, where members pay thousands of dollars for access to these specific trade setups. Keeping the strategy away from the general public helps prevent institutional algorithms from identifying the pattern and moving to neutralize the edge. Controlling the exposure of this methodology ensures the signatures Abdul looks for remain visible and tradable. Abdul is currently opening a private live training session to teach this entire sequence to a new group of traders. Because of the sensitive nature of the system, registration is capped at exactly 5 individuals from his total audience across YouTube and Twitter. This training will not be recorded, and there will be no replay access provided once the session concludes. You can secure one of these 5 spots by using the registration link provided in the video description. You can continue to provide liquidity for the market makers, or you can learn to trade alongside them before these doors permanently close. The market operates through a rigid architecture designed to seek out and absorb resting liquidity pools. These smart money concepts are incomplete. They provide shapes without context, trapping emotional entries milliseconds before maximum danger. Watch the opening gap. A sudden drop tricks traders into panic buying, while massive institutional volume sits hidden below, waiting for the reversal. You can memorize every fair value gap and order block in existence, but without a structural framework telling you precisely when that trap is being set, those patterns will only guarantee your failure. Now, step away from the panic. Look at the market through the lens of the trader on the other side of that trap, the one who executes with cold, mechanical precision. This is what structural clarity looks like in practice. When the retail trader sees chaos and noise, what exactly is the professional seeing? Elite execution depends on watching the retail crowd take the bait, waiting for their initial move to exhaust itself before stepping into the vacuum they left behind. So how do we translate this philosophy into a repeatable framework on the actual chart? Look at this schematic timeline. It begins with the ultimate filter, time. The entire system hinges on the exact opening window with the New York session, specifically the volatility that hits right at 10 a.m. Next, we strip away the noise. We completely ignore the lower timeframes at first, using the 4-hour chart to isolate a singular high-value point of interest, like a clean, bearish fair value gap. With our zone marked, we drop down to the 1-minute chart to watch the trap form. Notice how the market comes down but deliberately leaves the low of the New York session intact, creating an irresistible liquidity pool to bait early buyers. We do not buy that dip. Instead, we wait for a clear bullish signature to form, and then watch it fail. The moment that gap closes against the retail buyers, the trap is sprung. That failure is our trigger. The structure has shifted, the stop losses are exposed, and the entry is taken instantly, without a second of hesitation or emotion. There is no guessing, there is no hope. It is a strictly rule-based reactive machine. Abdul typically reserves these live execution breakdowns for his private inner circle to maintain the exclusivity of the system. Inside that private network, VIP members pay thousands of dollars just to observe the real-time application of this framework. But this weekend, Abdul is opening a rare window. He is hosting a private, live training session to walk through the exact mechanics of trading gold using this method. To protect the value for the existing VIP network, the doors are heavily restricted. Only exactly 5 people will be allowed to attend this live stream. Click the link in the description to secure your spot right now. Once those 5 seats are claimed, registration closes permanently. The market is a ruthless zero-sum environment. Every single day, one side of the chart becomes liquidity, and the other side gets paid. Make sure you are on the right side. Register now.